Consumer confidence is up. Let's have a look. Good afternoon, everyone. Florian Heise here, and welcome to another episode of Heise Says. I hope those of you in Brisbane are enjoying the Echo Show holiday. I'm here with my lunchtime coffee, and I thought I'd read through some articles. And today, Westpac has released their Consumer Sentiment Index results, consumer confidence. It's gone up, which is good news, So, for those of you that aren't familiar with it, I'll jump to Investopia, a website I'm frankly really enjoying. And, the Westpac Consumer Confidence Index. So the Westpac Consumer Confidence Index is an index measuring the level of consumer confidence in Australia. The Westpac Consumer Confidence Index is published by the Westpac Group and is used to measure household economic expectations by averaging 5 different indexes that measure separate aspects of consumer sentiment and fiscal health. So I will link to this in my blog if you'd like to jump to it and read it in greater detail, but that will give you a bit of an understanding. So it's 5 different indexes that pretty much mash together to get this consumer sentiment or confidence index. And it has jumped back up, so it's gone up to 100. So with these indexes, how it works is the higher the number, the more confidence there is. The lower the number, the less confidence there is. So let's have a read through this. And before I get into it, I'm taking a swig of my coffee. That's good. I need that. So the Westpac Melbourne Institute Index of Consumer Sentiment rose 3.6% to 100 in August from 96.5 in July. And before we go any further, I'll just jump back over here to trading economics, and we can see the forecast from TE was 98.7, where it was previously 96.5. So they're at 100. So it jumped a lot. It did better than expected, better than forecast, which is frankly surprising as well to me, everything I've read. Could this just be a bounce due to, the government handouts, and people are going to find out, well, not the government handout, sorry, the government tax rebate that everyone thought was a handout, and then they're all going to find, oh, wait a minute, we're not going to get it. When they get the credit card and boom, it'll shoot back down next month. We'll see. I will check. So superficially, this result comes as somewhat of a surprise, given that the survey was conducted against a turbulent backdrop with global financial markets roiled by escalating trade tensions between the US and China, the ASX down 3.4%, the Aussie dollar off 3 cents, the US since July survey. However, I'm going to zoom in a bit more so it's just easier for you all to see. However, the result does come in the aftermath of an unexpected 4.7% fall in the index in June-July that came despite consecutive rate cuts from the RBA and the restoration of political certainty following the May federal election. So it could be that it took an extra hit. We'll jump over here to see the graph. It took an extra hit over here because of the rate cuts, perhaps. At the time, particularly following the July fall of 4%, we speculated that households may have been unnerved by the unusual sequence of consecutive rate reductions, implying that there may be some alarming drop in confidence in official circles around the economic outlook. Well, yeah, that's a reasonable expectation to make. I honestly would think that would be frankly, the expectation of having such rapid drops. I was surprised that the RBA did it back-to-back and didn't slow down a little bit. But it's good to see they're aware of that too. I wonder if the RBA was. Realizing that lower rates are in the offering, but there is no need for further consecutive changes, might be a more encouraging signal for households than a rapid sequence of rate cuts. Yes, it might have been. And it's also probably now the actual effect of the rate cuts is flowing through. You're realizing, oh, wait a minute, I can pay a bit more off my mortgage. Oh, wait, it's come down. I can put that money off that credit card and get rid of that debt. Oh, wait, I can run to JB Hi-Fi and spend my tax rebate that I think I'm going to get, and I found out I won't get it in the month after. Indeed, back to the article. Indeed, part of the gain is consistent with firming expectations for additional interest rate cuts. Well, yes. Let me know in the comments, guys, before we go any further. How many of you think there are going to be more cuts? How many think there are going to be more cuts? The RBA left rates on hold at its August meeting, pausing after the 2 cuts in June and July, but retained a clear easing bias. The media and economic forecasts now expect a further lowering of the official cash rate in coming months. Well, let's have a look here. Let's see, I'll jump to what's the forecast. Oh, yeah, they're releasing more things. No, there's no forecast here for the rate coming yet, but we'll have a look. We'll keep an eye on it. This is influencing consumer views. Responses to an additional question on expectations for mortgage interest rates, run every 6 months, shows just 31% expect rates to be higher in a year's time compared to 43% when the question was run last February, and 50% this time a year ago. This is the most dovish mix of responses seen since mid-2012, when the RBA was moving through a significant policy easing cycle. This is less alarmist, but nevertheless confident view on interest rates appears to have calmed expectations for the economic outlook. The sub-index tracking expectations for the economy next 12 months rallied 9.6 in August, reversing most of last month's 12.3% slump, but still down 8.3 since May. Longer-term expectations for the economy also recovering. The economy next 5 years, sub-index, rising 4.5% after recording a 6.7% fall last month. So it's interesting to see the different ones that they combine together. Views around family finances have shown a more muted improvement. The sub-index tracking consumers' expectation for finances next 12 months rose 0.7, but remained in slightly pessimistic territory. Finances versus a year ago sub-index lifted 0.9 to a 5-month high, although at 86.5 the sub-index remains at weak levels overall. The muted gains are despite further signs of improvement in Australia's housing market. Really? And the federal government's tax relief, which may be starting to see cash flow to some households. It's a slight increase in improvement in the housing market, in the property market, a slight one. I wouldn't say it's, confirmed, but I guess, you need to, maybe that's what people are responding to. Remember, this is consumer confidence, so this isn't based on absolute reality. This is just based on perception. So spending attitudes showed a firmer gain, and time to buy a major household item sub-index is up 2.8% in August to the highest level in over a year. A major influencer on the near-term economic outlook is going to be the mix between spending and saving as households receive their increased tax rebate. Not all of them. Not all of them, and as I discussed yesterday, a lot of the economic stimulus from the tax rebate isn't working as planned because the money's going to, shall we say, middle-class families who are saving it or paying off debt. With sentiment flat and households remaining risk-averse, we expect consumers to favour saving over spending, so this lift in time to buy is an encouraging sign for retailers. Yes, they're probably right there. Consumers' job loss fears eased slightly in August. The Westpac Melbourne Institute Unemployment Expectations Index improved slightly, recording a 0.8 decline to 133.3. Recall that lower readings indicate that more consumers expect unemployment to fall in the year ahead. That's still pretty high. While the index is around its long-run average level, it has risen 10.3% since May, a significant deterioration from what were consistently better than average readings seen over the 6 months to February. Household-related sentiment continues to show a clear positive response to lower interest rates, with assessments of both time to buy and household price expectations recording further gains in August. The time to buy a dwelling index rose 3% to 126.9, comfortably above the long-run average of 120 and the highest level since early 2014. Wow. Okay. Sydney and Melbourne continue to lead the turnaround, although buyer sentiment posted particularly strong gains in WA and SA this month. Buyer sentiment has also been notably softer in Queensland. The state index down 6.4% this month and down 11.6% on a year ago. That's surprising. That is really surprising. I guess maybe people are just hitting it. So the Westpac Melbourne Institute Index of House Price Expectations Index posted a solid 5.1% increase At 125.4, the index is up 40% since May, and back on a par with levels in mid-2018, although still 18% below its previous peak in March 2017. All major states recorded a lift in price expectations this month. Well, we'll have to keep an eye on it, guys. The Reserve Bank Board next meets on September 3. Westpac expects the board will decide to keep rates on hold in September before cutting rates by another 25 basis points at the October meeting, with a final 25 basis point move taking the cash rate to 0.5 in February. Signals from the RBA are quite clear. In its recent statement on monetary policy, the RBA lowered its forecast for inflation, wages and growth, while lifting its forecast for the unemployment rate. Those forecasts were despite basing them on the technical assumption of adopting market prices, which anticipate 2 more rate cuts. Accordingly, we feel reasonably comfortable that the RBA board will be cutting rates at least twice more this cycle. And this is from Bill Evans, the chief economist. So we've got here, let's have a look at some of the figures, and I'll make sure you can see all that on the screen. Polished operation here. Consumer Sentiment Index, the average is 101.5. 2017 average was 95.5. August 2018 was 103. July, so last month, was 96.5, and now it's at 100. So month on month, it's 3.6, and it's down 3.5 in the year. We can see all the other ones here. Family finances, we'll just look at that, 86.5. Family finances next 12 months, 99.1. Economic conditions next 12 months are low. Time to buy a major household item is high. Could that be because people are expecting the Australian dollar to decline further in the US? Although I think it has. And let me just jump here and we'll have a look. Aussie US, what are we sitting at right now? Okay, 67.9, yeah, so I thought I saw it was at 70. I thought it jumped back up to 70. I think I was looking at an outdated article, unfortunately. So there you go, guys. Consumer confidence is up to 100. So, you know, a good sign. Do you think it's just a rebound? Do you think it's just a rebound from people expecting that they'll get a cash handout? So it's time to buy a major item. Is $1,000, would that be a major household item? Maybe it would be. So this will be interesting. I'll make sure to have a look at what happens next month when people start getting the credit card bills from all of these purchases. Anyway, guys, like, share, and subscribe. Ding the bell to see my daily content, and I'll talk to you all later. Take care.